funds out of the country.
But the bundling of payments, the 4 payments that are being bundled together to the IMF and that are being paid later on this month, I mean,
well, maybe they'll be paid.
Maybe, yes. It buys a bit of time. Isn't it okay if a deal is reached, even if it is a bit delayed? I mean,
sure. If a deal is reached, it doesn't matter if it's delayed. The time is running out to make that deal happen. It has to be approved by a certain number of parliaments. They need time to do that. So if you go back from that, then you've really got to get some agreement on the conditions, probably within the next 10 days. Otherwise, I think we're in a position where you could go into default, you could have capital controls, then you'd have maybe 30 days grace as the IMF doesn't get paid, or we're in this situation where maybe there could be a deal during July. There are more payments, large payments that the Greek government is supposed to make towards the to the ECB in July, and there clearly is not enough funds to do that unless a deal is reached. So we could go into a sort of semi-crisis situation in July, which may bring about a deal. Sometimes that concentrates minds, or you could slip into a complete mess.
So given the ECB's support to Europe via quantitative easing, if that's seen as a positive, and given that the economic data, I'd say, is slightly more on the recovery side versus the non-recovery side, are those two items going to outweigh the potential of a Greek default? I mean, in other words, is Europe really going to care if Greece doesn't make a couple of payments?
I think that over the longer term, the Eurozone and Europe could survive a Greek or exit from the Eurozone. Because it's only 3% of Eurozone GDP. It's not decisive in terms of trade and investment. Most of the credit institutions, private sector, are out of Greece. But the whole mess is a really bad hit towards the image of the euro and the Eurozone in general. It means that countries can reverse out of it in a mess. And it means that they'll be worried about whether they can ever do agreements in the future if they have these situations.
Bob, I just want to interrupt for 1 second, delicately. We're just showing viewers the 10-year Bund yield, and I was just talking a couple of minutes ago about how we'd gone above 1% earlier in the session, then shy of 1%, just like we're seeing now. We're flirting with this 1% level again, just above that 1% mark. And last time we saw this was back in September. This supposedly on some reports of a staggered deal on aid. So I'm not sure what that means right now. We don't have confirmation on anything, but it does seem like the market is still rife with a lot of speculation on what exactly is happening with this Greek deal. Also worth noting that the German index is up by a healthy 2.5% now.
But most markets are today, I think. So,
I mean, you've got a euro-dollar 113.37, something like that, up by 0.5% or so. The volatility that we're seeing is just going to be exacerbated here over the next couple of months because of the summer lull.
Well, it's seasonally that's true. Also, I think anybody who looks at the valuations now in equity markets in the mature economies would have to say that they're significantly overvalued now, in whatever you want to measure it, in the price-earnings way, price to book, or looking against GDP, or all sorts of different ways of valuations.
In European equities?
And in the US. So US and Europe, the mature economies markets are now, it's a 5 to 6 year rally relative to earnings growth going forward. They look well overvalued to me, and there's every possibility now, if bond yields start to pick up with some pace, which they could, that we can have some sort of correction which could be triggered off by Fed action later this year.
Okay. Bob, we'll chat more here through the show. For now, thank you. Bob is with us for the remainder of the hour. As said, you can find us on European Closing Bell at cnbc.com, on email, or on Twitter at Louisa Boyesen. Later on the show, the clock is ticking down to details of tonight's Mansion House speech. That happening in around 40 minutes' time. What does George Osborne have in store? Stay tuned. We'll be talking more about that. The markets have closed, of course, closing in around 10 minutes. After the break, falling sales but a rising share price. What's going on at Sainsbury's? What's going on at the grocers? Find out as we come back in just a couple of minutes.